stop using the Supertrend indicator right now, because in this video, I'm going to show you an even better TradingView indicator that will 10x your trading profits. The trading strategy we're going to use with this all-in-one indicator literally has it all. It has easy-to-spot entry signals, multiple predefined stop-loss levels, and take-profit levels that have crazy home run potential. This strategy works on multiple financial markets where there is sufficient volume and market participants. If you'd like to see more videos like this in the future, where we cover all things regarding profitable trading systems, smash the like button, subscribe, and hit the notifications bell so you don't miss out on future content. All right, this strategy works best on assets that trend and break out frequently. So for this example, we're going to be looking at the S&P 500 index, and we're going to be on the 15-minute chart. The hourly charts, the 1 hour and 4 hour, are also really good for this strategy if you're interested in swing trading. Unfortunately, if you go down to lower time frames with this indicator, you'll get a lot of false entry signals and it doesn't look pretty. Now for the indicator. Go to TradingView and go to the Indicators tab and type in FDI. And it's the first one here, FDI Adaptive Supertrend with floating levels by locks. Add it to your chart and go to Settings. We're going to untick this, Show Signals box, and we're going to leave the rest at the default settings. Be sure to stay till the end of the video, because I'm going to give you a few tips to increase your win rate and profit with this strategy. Before we go into the strategy, you really have to know the ins and outs of this indicator, or else you'll be throwing money down the toilet. So, the FDI Adaptive Supertrend with floating levels is a fractal dimension index adaptive supertrend indicator. This supertrend indicator uses FDI calculations to make it better adaptive to volatility of the market. The floating levels that this indicator comes with is similar to something like an Ichimoku cloud. And much like an Ichimoku cloud, at a glance, you can define levels of support and resistance. The trend, you can define stop loss and take profit levels, and whether price is trading in a range or potentially reversing. Let's call this the cloud. When the price is above the cloud, price is bullish, and you would want to only look for buy setups. When the price is below the cloud, price is bearish, and you would want to only look for sell setups. You do not want to take any trades when price is trading inside the cloud, as it indicates market indecision and price choppiness. The bigger the cloud, the more volatile the price action is, and the higher chance price has to trend. When the cloud is small, price is less volatile and likely trading in a range. During a trend, when the cloud goes from big to small, it indicates that the current trend move is losing its steam. From that point, price will either trade in a range, pull back, and continue in the trend direction, or reverse. Conversely, when the cloud goes from small to big, it indicates that volatility is picking up, price consolidation is ending, and a potential price breakout is imminent. And then we have our adaptive supertrend line. When the line is green, price is bullish, and you'd want to look for buy setups only. When the line is red, price is bearish, and you'd want to look for sell setups only. In this strategy, this line will act as our trailing stop loss and take profit. Now for the moment you've been waiting for, the strategy. Buy setups. We're going to use our one indicator to give us all the conditions we need for our trade entry. Firstly, we want our supertrend line to have recently turned from red to green within the last 25 candles or so. Second, we want a recent cloud change from small to big, indicating that price is likely to break out of a range. And third, we want a bullish green candle close to break out of the top side of the cloud. We want to enter our trade at the candle close. Now we have few potential stop-loss levels to consider. The first level is at the white line at the middle of the cloud. This would be our more aggressive stop-loss level, yet still pretty safe. This yields the best risk to reward trades. Then we have 3 safe stop-loss levels. One at the red line at the bottom of the cloud for buy setups, and the green line at the top of the cloud for sell setups. Then we have the supertrend line. And lastly, at the recent swing high or swing low. For example purposes, we're going to put our stop loss at the white line. As price moves in our direction, we want to trail our stop loss and take profit when price touches the green Supertrend line. Here's another buy setup. We have all of our conditions met here. Supertrend just turned green from red. We have a recent increase in cloud size. And we have a bullish green candlestick close breaking out of the top of the cloud. We enter a trade at the candle close. And we have a few more setups here. Sell setups. For sell setups, we first want the Supertrend to have recently changed from green to red within the last 25 candles. Second, just like buy setups, we want a recent cloud change from small to big to indicate a potential price breakout. Third, we want a bearish red candle to close and break out of bottom of the cloud. We will enter a trade at the candle close. Again, we can put our stop loss at either of these 4 levels, but we'll put ours at the white line. And we take our profit when price hits our red Supertrend line. Here's another sell example. Supertrend went from green to red. The cloud expanded in size here, and we have a bearish candle breakout from the bottom of the cloud. Then we enter here at the candle close. Stop loss at the white line. Now, I'm going to give you a few tips to improve your trading, profit, and win rate with this strategy. Tip number 1. Note: the Supertrend line can act as a potential support or resistance level, so there will be times that price touches the Supertrend line briefly, then continues to trend in your desired direction. So, it might be a good idea to keep your trailing stop loss a couple points from your Supertrend line, a few points under for buy trades, and a few points above for sell trades. Or you can keep a close eye on how price is reacting to the Supertrend line and react accordingly. Tip number 2. Since breakouts likely occur during session open or after some sort of fundamental news, it might be a good idea to only trade during sessions when price volatility picks up and when higher volume, liquidity, and market participants are present. To see that on the chart, go to the Indicators tab and type in Sessions. We like to use this one by Lux Algo, since it's customizable and it shows the session's high and low price levels. A price break of these key levels can be used as additional confluence when trading a strategy like this. Tip number 3. Since this is a strategy on the 15-minute time frame, it's going to be absolutely painful waiting all day for price to touch your trailing stop while you're in a trade. So there's a few things you might want to consider. Have alerts set up on TradingView when price touches the Supertrend. To set that up, click on the Alert tab and create alert. Our condition is the S&P 500 index crossing, and we choose our FDI Adaptive Supertrend Indicator. Then we click on this tab and select Supertrend. Then we'll set the trigger to either once per bar or once per minute. Then hit Create. However, you might miss out on some profit using this method, since you have to retrieve the alert, then react to close the trade. Depending on what you're doing at the moment, minutes or even seconds missed could be costly. Most trading platforms don't have an auto-trailing stop-loss feature that you can attach to an indicator like the Supertrend. So you might want to look into a Supertrend Trailing Stop-Loss EA, Expert Advisor, which can automatically get you out of the trade while you're not present. Think of it like a trading robot. If you're knowledgeable with EAs, can even go as far as to completely automate this strategy or any strategy for that matter. Another option is to have a predetermined take profit, like a 1 to 1.5 or 1 to 3 risk to reward ratio. Just set and forget. I hope you found this video helpful. Remember, this is not financial advice. This video is made for educational and entertainment purposes only. Be sure to do your own back and forward testing before trying this strategy out in the live markets. If you enjoyed this content and haven't already, smash the like button and subscribe so you don't miss out on future content. If you're interested, we also have premium content on our website at thetrademeta.com. See you in the next one.